Well, it's good morning from here in London, and it's very much a good afternoon from Busan in Korea. I am absolutely delighted to welcome all of you to the 30th Global Financial Centers Index launch here on the 24th of September. It really is one of the amazing things about pandemics and lockdown, but we are at least able to produce a number of really fascinating combinations internationally in ways that, well, I guess we could have, but we certainly couldn't have afforded pre the pandemic. Now, you'll know me. I'm Professor Michael Mainelli. I'm the executive chairman of Zien Group and creator of the Global Financial Centers Index back some quite serious 17 years ago. And I'm delighted to welcome you to today's program as we're here with our colleagues and friends in Busan. We're going to be talking about a number of subjects today. Personally, one of the amazing things I've seen over the last 30 years has been the fantastic rise of Korea, and in particular, the rise of Busan, which I was lucky enough to visit many, many years ago when it was a fishing village. And I can assure you that today, and we've got some very interesting results, it is far from a small fishing village, although it still retains a lovely charm amongst its people, its landscape, and its culture. After I'm out of the way, we're going to hear a little bit more because I think this is a fantastic opportunity to hear about Busan. And we are delighted to have Dr. Hinam Choi, who is the ambassador for financial cooperation with the Republic of Korea, doing this today with us. Then we'll move into the meat of the subject, and my dear colleague Mike Wardle will be presenting the Global Financial Index 30 results, our half-yearly results over 15 years of publication, but over some 17 years of index production. I might make a few observations towards the end, but we have sufficient time for questions, comments, and answers. And whilst Dr. Hinam Choi is unable to stay with us for the entirety of this, Marcus Kwan and his colleagues are here to answer questions about Busan. So it's a full program. Please use the GoToWebinar facility to feed questions in to Mike and me that we can introduce into the conversation. Yes, there is a recording, and as we speak, the results of the press releases will be posted for you to take away. And in fact, I can say with some confidence that the index publication press has already begun in City AM on page 3. So with no further ado, Dr. Choi, may I say very much that the floor is yours.
Thank you, Professor Michael. Thank you for your kind introduction and inviting me to kick off the launch of GFCI 30. I'd like to start by congratulating Zien on 15 years of producing the Global Financial Centers Index. Twice a year for 15 years. I think it's a great job. You have evaluated major finance centers on their future competitiveness. The index is a great way for cities to gauge and compare their progress and a valuable reference for policymakers and investors. Thank you to Zien for your research and congratulations again. As a Korea's ambassador for financial cooperation, my job is to support Korea's growth as a global financial hub. My focus is on our two major cities, Seoul and Busan. You are probably familiar with Seoul, the capital of Korea and our largest commercial center. So today, I'd like to spend a few minutes talking about the co-host of today's event, Busan, and the many investment opportunities it offers. Busan, located at the southern end of Korean peninsula, is the country's second largest city, its largest port city, and home to the world's fifth largest port. With a thriving business scene, Busan ranked 36th on the GFCI last March. Going forward, it aims to be no less than a hub for global logistics, shipping, and digital finance. For investors, this means diverse opportunities. Let's start with Busan's growth as a global logistics hub. Busan is now building what they call a triport. It involves a new railway that will connect a new airport to nearby new port. The city will also build a logistics complex near the triport area, plus roads, tunnels to make for efficient transport. All this will entail plenty of infrastructure, real estate, and logistics projects in the future. Projects that will need public as well as private capital. Banks and asset managers in Korea and abroad can invest through public-private partnership, for example. So Busan welcomes global partners. You can also find the opportunities in Busan's potential as a shipping hub. The world's top 3 eco-friendly shipbuilders, Hyundai Heavy Industries, Samsung Heavy Industries, and Daewoo Shipbuilding and Marine Engineering, are just a city or 2 away. With the changing environmental regulations in the maritime and shipbuilding industries, demand for eco-friendly ships will rise fast. For example, International Maritime Organization, IMO, that is responsible for regulating shipping, recommends that maritime industry reduce CO2 emissions by 40% by 2030 and 50% by 2050. For this to happen, we need greener ships. Clarkson research estimates that orders could grow 2 to 3-fold between 2020 and 2031. Currently, Korea's top 3 shipbuilders handle more than 70% of the world's new shipbuilding orders. They possess top LNG-related technologies, and they are also going beyond LNG to develop core technologies for greener ships, like ships that run with hydrogen and ammonia. For Busan, rising demand for greener vessels will make up for a robust shipping finance sector for at least the next decade. And with more than 90% of Korea's shipping finance now led by policy finance institutions, the Korean government plans to support more private financing. Last but not least, Busan is working to be a leader in digital and sustainable finance. Their progress will generate innovative opportunities. In 2019, Busan was designated a blockchain regulation-free zone. As a result, 6 blockchain-based pilot projects are now underway in the city. The goal is to expand these projects to full-fledged business. For example, one of them involves a real estate investment model using security token offerings, or STO, which are only possible without blockchain regulations. If you could apply STO more broadly, like to infrastructure building or shipping financing, that would create digital finance opportunities for private capital and resources. Busan also aims to play a leading role in sustainable finance, as does the rest of Korea. In an effort to reduce carbon emissions, Korean government established Korean Carbon Exchange in 2015, called KCX. It is the world's second largest such exchange after European Union's. Private and institutional investors will soon be able to invest in this market. More specific to Busan, as you know, ESG products are on the rise. Recently, the Korea Housing Finance Corporation, which is based in Busan, issued 1 billion euro worth of ESG bonds in Europe. In fact, a total of $50 billion in ESG bonds issued by Busan financial institutions are outstanding. And this amount is expected to keep growing. For foreign banks and asset managers, this is great opportunity to purchase foreign convertible currency ESG bonds. To close, I'd like to point out that Busan's ambitions extend beyond the city limits. As it strives to become a hub for global logistics, shipping, and digital finance, Busan will work with nearby Ulsan City and the South Gyeongnam Province to create the synergy of a megacity. Most importantly, Busan wants to work and partner with you, investors at home and abroad, as a hub connecting the region and the world. Thank you for listening. And now I'd like to turn it over to Mike Warden, Head of Indices at GN, for the part we have all been waiting for, the latest GFCI 30 result. Mike, floor is yours.
Well, thank you very much, and for your commentary on developments in Busan. And those of you who are listening from other parts, Busan Finance Center and colleagues are always willing to have a conversation with you about opportunities for investment in Busan. Well, good morning from London, good afternoon in Busan. I'm Mike Wardle, I'm Director of ZN and Head of Indices, and I'll be presenting today the results of GFCI 30. Our work researching financial centres through the GFCI, but also in the Global Green Finance Index and the Smart Centres Index, is part of ZN's Long Finance programme. And through this programme, we intend to make progress in answering the central question underlying the Long Finance programme is, when would we know the financial system is working? Turning to the GFCI, first of all, a brief word on the methodology we use. The GFCI is a factor assessment index, which combines quantitative data with survey data, by looking at the correlation between the two sets of data and combining them into a single index. The strengths of this is we think that we are able to capture over 140 different quantitative measures which we build into the index, but we also take account of the reputation of cities amongst finance professionals. Looking at the GFCI world, in the first edition of the GFCI, published in 2007, following the earlier work being done on developing the index, we listed 46 financial centres. We now include 116 centres, with the inclusion this time of Kigali and Lagos, reflecting the continued development of the African economy, and very good to see African centres coming into the family of global financial centres. I mentioned that part of the data set on which the index is based is a survey, and this just shows you that, first of all, the range of industry sectors that are involved in responding to the GFCI survey, a very broad range, and secondly, where those people are in the world, with the largest number of respondents coming from Asia Pacific. And it is good that we have so much engagement across the world with the index. So on to the main results. First of all, the top 20 centres. New York retains its top place in the index, with London second. But the interesting part from this slide for me is that all but two of the leading centres fell in the GFCI ratings. And I'll come on to movement in the ratings more generally in the index in a moment. So apart from Paris and Amsterdam, all the centres here at the top of the index fell in the ratings. And there's a variety of changes, as you see, in the ranking places. And so what headlines should we draw from the results? First of all, that, as I mentioned, London, New York and London retain first and second places. Hong Kong and Singapore in third and fourth positions fell 25 points in the ratings. And overall, the general ratings across the whole of the index, the average rating fell 2%. We're still not back to the levels of ratings that we saw in 2019. So the impact of the pandemic and continued uncertainty in the world economy is still being felt. In terms of other results, there's been an interesting shift in that Asia Pacific centres generally fell in the ratings in GFCI 30. There's a question about whether the economic benefits of the good performance of Asia Pacific during the pandemic perhaps are levelling off. While North American centres performed well in GFCI 30, suggesting perhaps renewed optimism about the US and Canadian economies. We're not sure, of course, yet whether this is a continuing trend or whether this is a simple point in time in GFCI 30, but we'll be watching that carefully. And the other thing to mention is that New York and London continue to perform very well, which suggests that they found the way to sustain business performance despite radical changes in working practices in 2020, with a very large number of people working from home, working remotely, but still managing to achieve very high performance. Looking at regional performance over time, we track the rating of the top 5 centres in each region. And what we see here is that, as I've mentioned, there's a general falling off in terms of the ratings in the last couple of editions of the index, although Eastern Europe and Central Asia has had a bounce back in GFCI 30. And looking at the ratings of the top 5 centres in the index over time, we see that they are coming together. There is less difference now in the ratings than there were when we started this index, and that is a measure across all centres in the GFCI that ratings are generally becoming very competitive, and quite often the difference between a ranking point is only 1 rating point on a scale of 1,000. And this is important that we realise that the particular rank that a centre achieves in a particular edition of the index is perhaps not as important as the 5-year trend. However, looking at the top 5 centres and their rank over time, London and New York have been ranked first or second throughout the publication of the GFCI, with Hong Kong and Singapore generally showing 3rd and 4th position, although that changed a little bit in recent editions. However, San Francisco, who's new to the top 5 in this edition, has had a much more volatile track over the publication of the GFCI. And this suggests that San Francisco's place in the top 5 may well not be secure and could well be overtaken by another centre in future editions. I'm going to talk a bit about each region of the world because there were messages, I think, for centres in those regions. In Western Europe, London's still out in front, with and it shows that there is a competition amongst other centres, but at the moment London is managing to maintain very clearly its lead. Paris and Amsterdam did well in this edition of the index, rising in the ranks, and the only centres to rise in the ranks among the top 20, as I mentioned earlier. In Asia Pacific, you will note that all the centres, leading centres in Asia Pacific, fell in the ratings. We'll be watching this position very carefully because the underlying strength of the Asia Pacific economy is still clearly there and robust, but there's something in the data in this time which suggests that there's a slight levelling off. I'm very pleased to say that Busan was one of the leading Asian Pacific centres who rose in the rankings in GFCI 30, up 3 places to 33rd, which is a very creditable performance. Turn to North America. I mentioned that North American centres have generally done well in ranking, although the leading centres also fell in the ratings, but they just fell less than some other centres. So the rank increases are important, and they cover both centres in the US and Canada. In the Middle East and Africa, Dubai and Abu Dhabi both improved their rank in the index and retained the leading places in GFCI 30 in the region. Casablanca continues to lead in Africa, although we note that South African centres have had a bit of a bounce back from previous lower scores. And as I mentioned, Kigali and Lagos joined the index for the first time. So we're seeing more African centres taking a leading place. In Eastern Europe and Central Asia, Moscow leads the table in this region and rose 7 places in the rankings. And generally, centres in this region performed well in this edition of the index after they dropped in the last couple of editions. So a bit of a bounce back in terms of their performance. And finally, in Latin America and the Caribbean, looking at the leading centres, Mexico City takes the leading place in the region. Island centres, both in the Caribbean and indeed the offshore centres in Western Europe, have fallen back in GFCI 30. And again, we don't know whether that is a trend or whether that is simply the impact of the effects of the extraordinary year we've had in 2020. Just briefly say that one of the things we do in the GFCI is profile centres into 16 different categories. And these first of all cover the centres which we rank as global. They're global because we know from our research that they are very well connected with a large number, a wide range of other cities, and they have business connections across the world. The next set of centres we classify as international. They have still a range of connections with other people, other centres in the world, but fewer than those that we rank as global. And you'll see we also rank centres as whether they are diversified or specialist. What this means is that where a city is diversified, it has a wide range of strengths. Where it is specialist, it tends to have more of a niche profile. And those on the left-hand side of this slide, including Busan, are what we call broad and deep. They have breadth and depth in their financial services. And finally, we have a group of centres which are more focused on their local region in terms of their business activity. And this is a very valid approach for financial centres and still very strong. But it helps us to look at financial centres and helps financial centres look at where their market is, but also how they might want to develop that market in the future. Next, I'm going to talk a bit about industry sectors. One of the analyses that we run in the index is to run the index model, just taking account of the survey responses from people working in particular industry sectors. And this gives a different range of rankings to the index. The leading centers generally are strong across all sectors, and you'll see that New York in particular comes out top in almost all areas. But it's notable, I think, that in insurance, Singapore, Hong Kong, and Shanghai are seen to lead New York, with Beijing again coming over London. Suggests that people in insurance are particularly value the contribution which Asia Pacific centers and Chinese centers in particular are making in the field of insurance. We've also published in recent editions of the GFCI a fintech rating. This is based on a separate question in the survey, which asks people to comment on centers as places to do fintech business. In this ranking, Asia Pacific centers, Chinese centers in particular, outperform their overall ranking in the GFCI, suggesting that they continue to have real strength in fintech and in technology development. And you'll see that Busan here is 22nd on this measure, whereas it's 33rd in the overall GFCI. So there's something here about the strength of Asia Pacific centers in fintech and outperforming generally their place in the overall GFCI index. I'm going to talk very briefly about reputational advantage before handing over to Michael Manelli. So first of all, what we look at is the assessment that people receive in the survey compared with the overall rating that's given in the GFCI once we combine that survey data with the quantitative measures. And those centers with a reputational advantage, in our view, are probably marketing themselves very successfully. They have a high reputation and maybe need to do more work in addressing some of the underlying strengths of their financial center ecosystem. At the other end of the table are centers where their reputation is not as good, in our view, as the quantitative data should suggest. And so places like Moscow and down to New Delhi are places where if people knew more about the strengths of those centers, they may well rate them higher. And this is a useful analysis for centers to understand where they should put their effort, whether into developing themselves and their financial center ecosystem, or whether they need to market themselves perhaps a bit more successfully. So they're the overall results of GFCI 30. I'm going to hand over now to Professor Michael Manelli for some other observations. Michael, for some reason we can't hear you. I'm very sorry.
Oh, my apologies, Mike. Yes, we had a local mute. Well, firstly, I'm delighted to be back here and to make a few observations, which I hope will put a little bit of color on to the results that we've seen so far. This next slide shows the various areas of competitiveness, and it's really just a reminder to all of you of the breadth of what we are trying to measure. We certainly get a number of comments and questions where people are in a particular industry, say, for example, a small area of asset finance, and they've done something really well in their center, but it's subsumed in the overall results. The second thing is that the index does combine, as we know, perceptions and hard data, and therefore there can be a fair amount of people adjusting over time. I mean, certainly one of the things we've seen in Europe recently has been a readjustment in post-Brexit perceptions. In other words, the continental centers had done perhaps a little bit better over the last few years, given the uncertainty about London. As things have become more certain, they've come back a little bit. So those are the sorts of things that we typically see. But anyway, as we move along, you can then have a quick look here, for example, at areas of competitiveness in the sub-indices. Now, these sub-indices, therefore, are slightly more volatile than the overall index, but they do give you a show here of how people compete in a variety of different areas. And as we frequently say, to be a leading global financial center up in the top 10 or 20, without question, we invoke the Anna Karenina principle that all happy families are alike and each unhappy family is unhappy in its own way. Basically meaning you've got to get a lot of things right: the environment, the people, their training, the infrastructure, the IT, the strength of the regulatory system, and good marketing, as well as a decent general environment. So there's a lot that's needed to pull forward as a financial center. And if we have a look, therefore, at a couple, there's some interesting things in this index. One is this looks at New York, and we're contrasting here in these spider diagrams GFCI 24 versus GFCI 30. GFCI 30 is the dark red line. And we're looking here at rank. One of the difficulties in this index for people interpreting it on the fly is they look specifically at their rank, which is fine, and it's a competitive environment, but it's actually your rating that's driving things. So if your rating is stable, you haven't done anything wrong, but if your rank is falling whilst your rating is stable, that means other people are overtaking you. So in a competitive environment, you want to improve. It's not us or the 10,000 respondents or whatever putting you down. But you'll see here that New York's rank has actually improved even better here in the very areas of competitiveness, putting it very solidly up there at number 1. There was a six editions ago, there was some consideration that the human capital and the infrastructure were slightly weak, And now if we look at the industry sectors, though, at the same time, New York has been picked off, so to speak, in the insurance area, where it slipped quite a bit. And we've seen Hong Kong, Singapore, and Shanghai move forward. This, of course, shows yet again the rise of Asia, but the permeation of that insurance barrier. Interesting to us here in London has been the long-running saga that Lloyd's did quite well in penetrating the US markets some decades ago, but has made very little inroads into Asia and has lost quite a bit of its South American business over the years. So what we're seeing here is, again, the rise of Asia, but now hitting very much at New York's sector there, whilst it remains extremely strong, even stronger in banking, investment management, and professional services. If we have another look at some of these sensitivities here, these are our dear friends in Canada. Personally, I've always been surprised that Toronto doesn't get a slightly better rating than it achieves. It's noteworthy that it is the third largest financial center in North America, and the quite significant and very strong Canadian economy has done well. But you'll see here again, kind of a widening there in GFCI 30, indicating really a little bit loss. Again, I hasten to point out on rank in a variety of areas other than reputation, and again on the industry sectors, a loosening and loss of rank really across the board. This is again an indication of a center that's very strong, doing very well, has a good reputation, but again is being overtaken by nimbler, younger, more eager competitors, again primarily in Asia and to a lesser degree in the case of Toronto in the Middle East. And now we turn to our co-sponsors today, the city of Busan. Extremely interesting, and I hasten to add, Busan had no idea of these results before agreeing to do this. What we've seen here, though, is an enormous improvement over the last last 5-6 editions. You'll see here on the left an enormous tightening in rank as Busan has been overtaking a number of other centers, really again on all categories here, so not a lot to comment on. But on the right-hand side, you can see the industry sectors rank. And here, I find this amazing in a way, because I'm conscious that over really the last 10 years, Busan has put tremendous efforts into strengthening its education sector, professional services, maritime law, attracting professionals to the area. And you can see this just enormous increase in perception of it on professional services. So really emerging as a strong area with a highly skilled workforce capable of delivering the financial services that are needed. I'm just going to close on one other bit that we picked up in the index, and this is about attractiveness of places to work. There are many indices that look at the quality of life and attractiveness, but we too ask questions aligned with that. And what you can see is that New York is an extremely attractive place to work and gets the highest number of reviews. Most of the other places there, it's personal taste, folks. I live in London and enjoy it, but there are many other lovely centers out there. But I have been to Busan, and honestly, I'm not surprised to see this high ranking right up there with Hong Kong and London. And you see this fairly significant jump below London to Beijing, and then the rest of the centers. But Busan has done an enormous amount of greening, and these lovely little oven-topped hills there, which you can see from everywhere in the city, are great. The lifestyle has been significantly enhanced with the development of the waterfront. Tourism is very good, etc. So it's really quite an attractive place to work. And just speaking candidly, I have a suspicion that Busan's rise is hardly halted. So we'll look forward in future editions, wherever we're teaming with, to see the increasing importance of Busan. Mike, I think that's it by way of illustration and commentary. I think we got a few questions. I would encourage people to put questions in or comments or observations into the GoToWebinar chat facility. But really, I'll hand back to you, Mike, for the Q&A.
Well, thank you very much, Michael. We've got a particular question on elaborating why Zurich fell by 11 ranking places. And you know, I can maybe outside this meeting dig into the data and go back with a more detailed response. But what we've seen in particular, I think, is you know, over the last few editions of the GFCI, is competition between European centres, which has meant that there's been quite a lot of volatility and movement in European centres. We don't know, as I've mentioned a couple of times, whether this is a trend or whether this is a point in time. and it could well be that Zurich bounces back in the next edition of the index. But the other factor is the strength of North American centres, and so I think you'll find that Zurich and other European centres perhaps have been outperformed in this edition of the index by North American centres, which has led to a fall in the ranks. But please rest assured, I will come back to you, with a bit more detail on that once I've had a chance to look a bit further into the data that underlies that. There's also a question from Bob McDowell about the Paris's rating. And again, I think this is to do with shifting competition in the European financial centres. Paris has performed very well in previous editions of the index and is back performing very well in this edition of the index. But there is still a lot of sorting out in terms of the reputations and the underlying business of European centres post-Brexit. And we've seen quite a lot of volatility over the last few editions of the index, with some centres rising and falling back again, some centres maintaining their position. So it really is to do with not just Brexit, as you say, but partly it is Brexit, and partly it is the increased competition between centres in Europe who are all competing for the same level of business. And I think also it probably represents, so Michael, you wanted to come in there?
No, I was going to say, Mike, I mean, one of the things that's been interesting and not a lot of analysis has been done is in the shifts around Europe, the size of firms that have moved. And Paris has actually attracted a handful of firms, but they're very large. And I think this is seeping out into the network. So if you're in Citigroup, you're very conscious that there's been an enormous shift from London, and that message is getting out there through that area. Whereas the large numbers of firms have moved to other centers such as Amsterdam, Luxembourg, or medium-sized firms to Dublin. So some of this is shifting out as people are beginning to understand where the weight is falling. And I think Frankfurt sort of falls into that category as well.
Thank you, Michael. Keiichi Otomo has asked about the respondents from Asia, noting that 69% of respondents from Asia, and asking whether we provide more breakdown. I can say that there are particular places where the promotion of the GFCI and the interest in GFCI is very high, including in Korea, including in China. And we would certainly say that a large number of respondents come from both China and Korea, but also from India. So they're the main places where Asian respondents reside and work. And just to say that we do of course do some analysis behind the scenes to understand whether there is any disproportionate impact of these things, and so we are very certain that the fact that there is 69% of respondents from Asia is not actually skewing the data. Another question from Andreas Lennart is how we view Tokyo's position in the rankings. Tokyo has slipped a little bit, but has been firmly in the top 10 for quite a while. And again, when I'm talking to financial centers, I often say that you don't focus on the particular rank in a particular edition of the index. What matters is whether you're in the range that is appropriate to your development as a financial center. So I think in Tokyo there'll be some concern that there's been a drop this time, but remembering that Asia Pacific centers in general have fallen back in the rankings. And the underlying strength of the Asian economy is, I think, is robust and will show in future editions of the index. But it also shows how much competition there is. And looking at the leading Asia Pacific centers, whether it's Shanghai, Beijing, Shenzhen, Hong Kong, Singapore, Tokyo, all looking for business, all looking for a competitive advantage. And the rise of Asia Pacific over the last 20 years has been quite marked. Michael, I don't know whether you had any other comment on on the Asia Pacific rise and positioning.
Yes, I mean we're getting into a level of subtlety. I feel like we're kind of commenting on a golf game, but it is worth just considering. So Tokyo changed in rank. It fell 2 places from 7th to 9th, and the rating drop though sounds terrible. It dropped 30, but Shenzhen dropped 32, and the bulk of the Chinese and Asian centers dropped between about 25 and 30. As well. So it's not a particularly unusual drop in that perception around the area. The exception here is really Korea, where Busan drops 2 on the rating, and Seoul drops 11, which is high-ish, but again low in Asia Pacific in this edition. So Korea holding up quite well, with another interesting exception, I think, in China, which is Chengdu. Which again only drops 8 points. So what we're seeing here is a kind of a wood for the trees element of the larger established centers. I wouldn't focus on seeing the up and coming smaller centers like Chengdu starting to move ahead. But at the end of the day, it's a bit like comparing New York with I don't know, St. Louis or something. These smaller centers are highly volatile, and a larger center like Tokyo is far less volatile and far less volatile over time, as Mike, you showed in that chart of the top 5 centers over time, and they're all beginning to track each other. I guess for me, one of the strange things is the slow emergence of specialization. One would think that these centers would begin to specialize, but the integration with the domestic economies are still quite strong. And we don't see quite the international specialization that we saw perhaps 30 years ago. I referred earlier to London, so London, the insurance market, but one could equally pick Luxembourg and asset management. One could pick Zurich and Geneva and commodities. Asia is still trying to settle out as to who's going to be the lead in any spot, or they're going to keep a pan-national lead, but not a pan-Asia lead.
Thank you very much. Yes, Naomi Takagoshi has asked about our strength, the strengths of the North American economy due to the optimistic economic outlook and the decline of Asia to leveling off of the good economy. And I think the point to make here is that the leveling off point may not be to do with absolute economic data. It's as much to do with sentiment and what people think is going on at the moment in terms of the strength of centres. And so we're always in this position when we publish indices at this time of managing historic data, because all quantitative data we use is historic once it's released. And one of the reasons we use alongside the quantitative measures the perceptions of people completing a survey is that does take into account people's sentiment about how things are moving more in real time, or indeed looking slightly to the future. And so we'll be watching very carefully whether, as I said, this is a trend which continues, or whether this is a one-off state in GFCI 30, and there was a kind of a bounce back for Asia Pacific as real data comes in about the performance of the economy. Another question from Akika Makawa: how do you utilize an index such as the Climate Change Performance Index, where the index is country-wise and not based on cities? That's a very good question. A lot of the quantitative data that we use is necessarily based on country data rather than city data, because that's the form in which the data is published. Wherever we can, we try to use city data, but there are many indices or many areas where city data is simply not available. So what we do is we assign the country score in that data series to each city in that country. It may not be perfect, but we think it is the best use of the data that we can manage, given what we have available. As I say, when we can find city data, we always use that rather than country data, because it is the best we can use for this particular index.
And
Michael,
I think
do you want to comment on that?
Yeah, I think there's an interesting problem that we've experienced over the years is, again, people attributing too much weight to very short-term movements. And Mike has given his sleight of hand kind of rule of thumb remarks. I personally believe that you shouldn't do anything substantially different except watch for anything less than sort of a 20-point rating movement on a scale which is 1,000. At 20, then you need to wake up and pay attention. And it's one of the reasons we like to publish the index every 6 months. An annualized index wouldn't give us quite the indicative sensitivity, but the indices and the ratings, the performance, the economic stats all come in different times. And an annual weighting would result in even larger movements that people would, in my opinion, pay too much attention to. So I think that's important. I think Kenneth Long has asked a question here: how many indicators are at city level versus country level for the USA? Mike, do you want to take that?
And I don't have the exact number on the top of my head, but the point is, it's not just for the US that all the indicators are either at country level or at city level for the whole index. And the majority of indicators, I can say, are at country level, because that's the level of data published particularly by organizations such as the World Bank, where we take a number of measures. So the minority are at city level, but they are at city level for all cities. And unless we can find reasonable global coverage in an index, we wouldn't use it. So we want a consistent measure across the world, rather than looking at measures in the USA or in another part of the world.
Yeah, I mean, I just hasten to add, folks, you can, if you get the full report, all of the indices are at the back. You can see what's used. All of the indices, we provide hyperlinks to the relevant websites where you can get the source information. The indices that we use over time clearly change. Some come in, some go out. Green performance is a rising area. Some of the old payment processing stuff seems to be fading away, but you can get hold of everything in the report that's online. Which leads to an interesting point here from Keiichi Aritomo, asking us, ease of doing business is significantly criticized lately. Is this ranking still used for GFCI scoring? And the short answer is yes. Mike pointed out quite a few. World Bank is a good source of statistics, the OECD. We use a variety of sources. Ease of doing business has come under criticism because of people supposedly gaming it and really trying hard. In some ways, though, this, if I must say, goes back to the opening remarks that we had from Busan. And really, as you're looking here, and I think this is the point very much that was being made by our colleague there, Dr. Hinam Choi, when he pointed out that indices really inspire people to change. Otherwise, there's kind of little point in doing them. And so a lot of the criticism of the ease of doing business has been the rapidity with which certain countries, in this case, have had units assigned really to get them to go up the rating. But they have also created real and positive change in many cases. So it's not a bad thing that people are trying to get ahead of the index. Arguably, that's what they really want. I might also point out, as we have a very engaged audience here today, Mike, we really welcome suggestions for new index inclusion. And so Mike's outlined what we're looking for: international coverage, ideally city level, but we will take country if that's all that we can get. And I always look at this as hypothesis testing. So if you have an hypothesis that, for example, what makes a center great is the color of its logo, and there's a logo index that gives us the colors of cities, we'll run the correlations and see if it has an effect on it. And over the years, we have had a couple like that. One was the murder rate, which people pointed out was really quite important. And another one that we looked at was days of precipitation as a surrogate for good weather. That turned out not to have much effect at all, but we are very open to ideas. It's a global, international look at what makes these things work. And so all ideas are welcome.
I think the only thing I'd add is that in the full report, you'll see that we list the top 30 indicators that are most closely correlated with the GFCI results, and indeed the top 30 that are most closely correlated with the fintech rating results, which gives you an indication of which of the quantitative measures seem to be most closely aligned with performance as a financial centre. So do look up the full report. It's available. It should be available online now. If you go to the ZN website, you should be able to find links to the Global Financial Centres Index, and the report should be up and published online. And you can dig into some of that data as much as you like. Now, do keep questions coming. At the moment, we don't have any waiting answer. And I'll give a couple of minutes. If we don't have more questions, then obviously we're happy to close and leave you to go about the rest of your day, the rest of your evening, if you're here from Asia. I think Michael, I think we might have exhausted the audience's curiosity for the moment. But of course, we'll welcome any engagement at any time.
It's a lot to digest, and again, I really encourage you to, if you're deep into this sector, please read the report and get back to us. Our emails are available in it, and we'd be delighted to engage in chat. But I too would like to thank the audience, very engaged today, much appreciated.
And so just by closing, the next edition of the Global Financial Centres Index is due in March 2022. Please do take the Global Financial Centres survey and encourage all those who you know working in the financial system to take the survey as well. We really are interested in the views of people out there working in the sector. So thank you very much to our colleagues in Busan for their support for this launch, and to Dr. Jin Hoi for his remarks at the beginning. As Michael mentioned earlier on, there will be a recording of the event available online within about a couple of working days. So if you want to go back and revisit or share that with colleagues, that will be available. And thank you very much for your attention. Have a very good day, a very good evening, and we'll see you at another occasion very soon. Thank you very much.